are going down. What's happening in today's market? Hey everyone, my name is Joe Bladek. Welcome to another episode of Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast with your host, Joe Bladek. I'm really excited to be on this episode today with you all, just to get talking about this Bank of Canada rate increase that we had yesterday. What a crazy day it was. We definitely had some unexpected news as the Bank of Canada raised its rates by 50 basis points. And that was something that was unexpected. It was really unexpected because a lot of the news broadcasters, experts, they were all saying that the rate will go up. However, it should only go up about 25 basis points, not 50 basis points, which is more than what we thought. So we're going to be talking about that today. Also, fixed rates going down. How crazy is that? With fixed rates going down and the Bank of Canada rate going up, why is that happening? What's bringing on this weird, strange event? A lot of my clients are flustered that that is the case. So we're going to get right into that. Welcome to episode number 112. Really excited that I'm able to be here with you all going over episode 112. It's been a great experience doing this podcast with all my viewers and just getting into all the mortgage information that we do here. I do this so everyone gets to know a little bit about me and why I'm doing these episodes. Well, that's simply because I want to be able to share my valuable information to help any future or potential or current homeowners make the right educated decision about their mortgage. And we find it has been useful. We have a lot of clients that have come back saying, thank you for that episode. So let's get right into it, okay? So today we have on our episode, why is the prime rate going up 50 basis points and the market leading up to that? Well, the prime rate did go up 50 basis points. Prime rate right now is sitting at 6.25%. So let's look at this here. We have the 5-year bond yield. That's going to tell us a little bit about why the 5-year fixed rate has been dropping. And as you can see here, we did have the 5-year bond yield. Now, let me just give you a little bit of background. The 5-year bond yield is what banks use to monitor their fixed rates, and they adjust their fixed rates as the bond yield adjusts. So the 5-year bond yield, it was at a high point here, almost 4% here. I believe it was 3.8 in the August, September areas here, and then it started to fall. And what we've noticed here, what have I noticed here on my side, is that lenders are now sending me updates saying that the 5-year fixed rate has gone down. It's gone down. We've been getting updates every few days. The 5-year fixed rate has gone down. So what does this tell us? Well, this is what the market is pricing in terms of interest rates and future interest rate hikes. So at this point, we did see this high point at October 28th, which was the last interest rate hike. Now we are at a low point for yesterday's hike of December the 7th of 2022 of 50 basis points. That tells me that the market is pricing in no future rate increases. And that parallels the sentiment I'm hearing across all the news networks. I'm hearing right now that the Bank of Canada may pause future rate increases after yesterday's 50 basis point rate hike. That remains to be seen. However, that's what they are saying. So again, this is the peak we saw here in October right there. And then we're down to here right now with where we are sitting at with the bond yield. So that has brought 5-year fixed rates down. If you're looking to get pre-approved for a fixed rate, it is a really good time to get that 5-year rate locked in before there is any future potential increases going forward. So you can get that locked in. And the 5-year rate right now should be at the high 4% or low 5s. There are some lenders, though, that are pricing 5-year rates higher. So it's really important to shop around. There's sometimes a difference of even 1% between two different A+ lenders. All right, so we're looking here at the inflation rate. The October numbers are still the newest numbers out here. So we're seeing that inflation was at 8.1% in June, down to 7.6% July, 7% in August, 6.9% in September and October. So we're sitting at 6.9%. Still a very high level of inflation. The Bank of Canada target inflation rate is 2%, so we'll have to watch this rate to see how far this goes down now with the newest rate increase of 50 basis points. So let's look at the next slide here. We have the inflation rate for the United States. It's also been coming down. However, it's still at a very high point of 7.7%. We did have a peak at 9.1% in June and has been slowly declining. However, still at a very high point of 7.7%. So I know the Fed is very aggressive with interest rate hikes as well. We could see future interest rate hikes in the United States just to bring this down. And if that happens, we'll have to see how Canada reacts with 𝗪𝗡 and his interest rate policy. I know that yesterday there was a remark made by 𝗪𝗡 about how the sentiment has been changed. The last rate announcement, there was an expectation of future rate increases to expect that could be happening. And yesterday, there was a sentiment of we'll have to pause and see if it's warranted in the future. So keep an eye on here on Canadian Mortgage Weekly as we go through these numbers. All right, so the CDOR rate, which I use to measure the variable rate and its competitiveness versus the 5-year fixed rate. Well, what do we have here? We have the variance to prime sitting at 1.39% and the CDOR rate currently at 4.86%. It's been hovering about steady here since about the beginning of October. I'm not sure if it's going to go up any higher than this. If it continues to go higher, I'll be first to report it here on Canadian Mortgage Weekly. And right now, the deal on a Canadian variable rate mortgage, it's not really a deal. You can actually get a 5-year fixed for cheaper than a 5-year variable. The only reason why my clients right now are taking 5-year variable rate mortgages is because they believe that over the next 5 years, rates will not remain this high and that they might take a high rate for year 1, possibly year 2, that they will benefit for years 3, 4, and 5 by a lower rate environment in the future. It is quite a bet, but there are a lot of clients that are looking at this from that perspective. If that is you or you would like to discuss that as an option, please contact me. You can book an appointment with me in the video description below. All right, so the Bank of Canada rate announcement that did happen yesterday. The overnight rate is now 4.25%. That is up from 3.75%. Keep in mind that this has gone up dramatically. We've had a 4% increase in the overnight rate. It was at 0.25% when we hit our low point. So a 4% increase to prime rate, that's been significant. If you are receiving a mortgage renewal and you're looking at a variable rate mortgage, that could be hundreds of dollars extra on your mortgage payment. If you're looking at keeping your mortgage payments the same or lower on your renewal, I have ways to be able to do that and re-amortize your mortgage over the term. So you can contact me or you can give me a call or you can book an appointment with me in the video description below. As mentioned earlier, the rate did increase by 0.50%, which is 50 basis points on yesterday's announcement, which was December the 7th, 2022. And the next rate announcement is now next year. It'll be the first one of the 2023 calendar year. That will happen at 10 a.m. on Wednesday, January 25th. And please join me for a live pre-rate show where I'll be talking about the news leading up to the event, as well as the live announcement of the event and the rate announcement. And there will also be a monetary policy released on that day, so we can take a look at that together as well. giving us some good data to look forward to for the rest of 2023. I was at the Canadian Mortgage Summit in Toronto earlier this month, and what they are saying, actually last month, and what they are saying is that we should expect a lower rate environment during the second half of 2023. So we'll see how that works out. Average national Canadian house price, we have it at $644,643 as of October. That actually brought the average national house price up by 0.65%, a small increase for the month of October. As you can see here, we have prices that have been steadily rising since 2005, with a large increase in 2021 and another large increase in 2022, up until February, where we hit our peak and then fell between February and August. And there has been a slow climb of the average national house price in Canada since August. We've had a 1.5% increase in August, a 0.44% increase in September, and a 0.65% increase in October. So quite an amazing feat for house prices, considering that rates have gone up so dramatically and lending actually has tightened quite a bit. Another comment from the Canadian Mortgage Summit is that the Canadian government is planning to make it even more difficult by introducing additional legislation and regulation to limit the amount of people that can qualify for a mortgage. So that is some also new news that I've been hearing. So whether that is to make it just harder for the average Canadian to buy a house, or if it's specific Canadians, I don't know, but that is what I'm hearing from the Canadian Mortgage Summit. So we'll have to keep an eye on that to see what happens in the future. All right. So again, this has been episode 112 with Joe Bladek here. I'm a mortgage broker. I deal in mortgages across Ontario. So if you're in, say, Windsor, London, Toronto, possibly Pickering, Oshawa, Whitby, Belleville, all the way to Kingston to Ottawa, I deal across all those cities. If we're going north, we're going to Barrie, Orillia, North Bay, Sudbury, Sault Ste. Marie, Kenora, Ontario. I deal in those areas. We can meet over Zoom, Skype, or WhatsApp, or text. And if you're local to Orillia or Barrie, I'd be happy to meet you in person as well. We broadcast this episode from Orillia, Ontario. This has been episode 112, and we're just going to go back here to slide number 1 here. All right, to talk about this rate increase, because a lot of people are concerned that fixed rates are going down and that variable rates are going up. If you're looking at your mortgage and see that it is in a variable rate, you might want to lock in at this point. So if you are looking at locking in and would have some questions about that, feel free to book an appointment with me in the video description below. I would love to take a look at your mortgage, see what options we have. Maybe we can lock you in, or it might be better to even take a you never know. You might be able to take a fixed rate or even re-amortize your mortgage, depending on what is most important for you. All right. Other than that, that's everything for today. If you have any questions, please drop them in the chat or send me a private message or book an appointment with me. I would love to take a look at your specific mortgage and the details behind it. Again, if you're looking at securing an interest rate, it's always recommended to get pre-approved for your mortgage. You can do that by sending me a message and we can get an appointment set up and we can do it that way. And we'll see you next time on episode 113, which will air next week at 11:30 on December the 15th. And we'll see you then. Have a great day, everyone. Thanks for joining me for Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, and we'll see you next time.